not as optimistic about meme coins, and the stuff that's going on now in the market is interesting, but it doesn't really provide a long-term value like DPIN does. I think it's a great application of crypto technology that's going to continue to be successful in the future.
Good morning. Happy Tuesday. It's May 14th. I'm your host, Helene Braun. Welcome to another episode of Markets Daily. The market is back in the red after a slight recovery yesterday. Both Bitcoin and Ethereum and most other assets are lower this morning. I assume partly in response to the fresh data we just received from the producer price index, which came in higher than expected at 0.5% versus 0.3% month over month. Traders are now awaiting an appearance from Fed Chair Jerome Powell today. And then, of course, tomorrow we have the highly anticipated CPI report. So overall, a lot going on in the next few days on the macro front. But also, meme coins saw one of the best performances yesterday after the reappearance of Roaring Kitty, who, if you didn't know, is the famous trader who contributed to the GameStop short squeeze in 2021. So let's unpack all of this with Thomas Hogan, economist at the American Institute for Economic Research and former chief economist for the U.S. Senate Banking Committee. Thanks for coming on.
Yeah, thanks. I'm glad to be on.
Thomas, as always, I want to start off with the call of the day. So what's yours this morning?
My call is I look for the continued development of DPIN, decentralized physical infrastructure. I think it's a very cool area where there's a lot of great new technology that is actual technology and services that are useful to people rather than just meme coins. I'm not as optimistic about meme coins, and the stuff that's going on now in the market is interesting, but it doesn't really provide a long-term value like DPIN does. I think it's a great application of crypto technology that's going to continue to be successful in the future.
I want to get to meme coins, obviously, a little later today, but first, as I mentioned earlier, the producer price index, which is another important inflation report that the Fed tracks closely, came in hotter than expected this morning. What does this mean for interest rates?
This is the continuation of a trend that interest rates had been coming down for years since their peak in the post-COVID pandemic, but then stalled out recently in the last couple of months. Like so far this year, all of basically of the different interest rate measures has stalled and maybe even gone up just a little bit. And so this is a problem for the Fed that they want interest rates to come down. They want inflation to come down to their 2% target so that they can start cutting interest rates. People had anticipated that they would already be doing that by now. But because the inflation numbers are just not coming down enough, they haven't been able to do that. And so now it looks like they may only cut interest rates maybe one time this year, if at all. And so the markets are negatively responding to interest rates being, to inflation being continually high, which means interest rates are not going to be very much lower. There was a positive sentiment, I guess, last week when the GDP came in a little bit lower than expected. So again, it's weird because that's not something we would normally celebrate. But at least in the short term, it's good for markets because it means the Fed might be interested in cutting interest rates sooner. And so, there's this balance where there's a couple of different things going on in the economy and people are seeing it through the lens of what is the Fed going to do based on this number.
So seeing the producer price index come in at this rate, what do you expect from the CPI then tomorrow?
I imagine the CPI will probably be around the same. I typically don't make price predictions. Like I look at what everyone else is saying and seeing if they have good opinions or not. But I think these things, I tend to think that these are kind of a blip. I mean, Powell talked in his most recent press conference about how, the Fed thinks that inflation is still coming down. Most of the trend is still downwards. They don't see this as a reversal of inflation taking off again, just that there are certain things. Like one of the main things is that housing prices don't get incorporated into the CPI for about a year. And so housing prices that had gone up a year ago were causing CPI to go up now. And of course, we know that housing prices came down over the previous year. And so they expect CPI to be soon going down because of that. That doesn't affect PPI as much, but there are some other things in the economy that could cause a short burst or bounce in PPI and then continue downward trend. And so I think that's what most economists are expecting, that we're still going to get a downward trend in inflation. It's just not as good for the markets if it's not happening now, because it means the Fed's not going to be cutting now.
Powell is speaking later today at the annual general meeting of the Foreign Bankers Association in Amsterdam. What do you expect to hear from him today? Are there any cues that traders are listening for? Is he going to say anything else than what he's been saying in recent weeks? What should we be watching for?
Powell is pretty good at not saying anything, even when he says a lot. It's a little bit like Alan Greenspan, who used to always say, on the one hand this and on the other hand that, and not really give away any information.
Yeah.
Powell's basically the same way. Every FOMC conference, every FOMC meeting, there's a press conference afterwards, and everyone asks questions for an hour and tries to ferret out any little bit of information. And he typically doesn't give too much away. I mean, the only times when he really says something important is when the press and media and everyone have taken some sort of narrative that he doesn't think is right, and he's okay with saying, like, look, like in this most recent press conference, people had asked him, look, inflation's going up a little bit, or is the Fed talking about raising interest rates? And he basically said that's not on the table. And so that did change the narrative around it a lot, but he didn't give any indications of what they were planning to do, just that they weren't planning to follow that people were talking about in the news.
Is that typical for Fed chairs to not say anything specific when, doing all of these speeches? I mean, why are they even talking then publicly?
So a lot of times it is helpful to understand what the Fed's thinking, and they do explain a little bit how they made their decision and give some information about what happened to them in the past and in thinking about what's going on in the economy. And I think that does actually help a little bit interpreting what they're going to do in the future. They try not to be specific about that from a meeting to meeting perspective. They do provide economic projections. The summary of economic projections every other meeting, so 4 times a year, gives projections of what they're planning to do over the next 3 to 4 years. So they do give long run indications of what they're planning. But yeah, in the short term, they try not to give any information away, and that's a very typical Fed move. That goes back to Alan Greenspan. And part of the strategy for that is that they don't want to hint what they're doing at their next meeting. But if there is something important, then they can come out and say that, and it'll have a big move in markets, right? And so they in most meetings try not to give a lot of information away, so that when they do say something, it has a bigger impact.
Now, as you mentioned previously, the GDP data on Friday showed us just how much macro data affects the price of Bitcoin. How much does Bitcoin's end of year price depend on the Fed?
So it's hard to say. I think Bitcoin over the years has had this on and off correlation with other risky assets, and I think that's more so now that you have a lot of traditional investors, or at least investment funds, not as many small time retail investors yet. But the ETFs have really opened the door to more traditional financial players coming into the Bitcoin space, which means that Bitcoin is probably going to act more like a regular stock, a very risky stock, maybe like a high risk tech stock is the way people consider it. But yeah, so that will, I think, put some correlation into Bitcoin between Bitcoin and traditional markets. But honestly, I think the opening of the ETFs, the opening of the door to traditional finance, will really have a lot of more capital coming in that I think will probably outweigh those short-term fluctuations. And so I think there will be a little bit more correlation to regular markets. And so Bitcoiners have to think a little bit more about what traditional people are thinking and what's going on in the macro economy. But over the longer term, I think the long run determinants of the Bitcoin price are just totally different. And the biggest one right now is all the new capital coming in from the ETF space. And I hope that that's a trend that will continue to push the price up. We started the year around 40,000. We went up to 74 and then back down to 60s, and, in the mid 60s now, or low 60s, I guess. But yeah, so we've gone up a lot already from that this year. And I hope that trend is going to continue on later in the year.
Okay, Thomas, I have 2 more quick questions. First one being, there's been a lot of chatter around whether the US economy is in a state of stagflation, which, means slow economic growth combined with speedy inflation, as you know. If that is indeed the case and the Fed acknowledges that, what does that mean for prices?
Right. So that has been something that people have talked about, but this is also something that Jerome Powell kind of shot down in his most recent press conference. So, he kind of made this joke. He said, like, people are talking about stagflation, but I don't see the stag and I don't see the flation. And what he meant by that is, like, yes, okay, we're seeing a very small bump in the inflation numbers right now. They're coming down. He still believes the long-term trend is down, and that this bump is not a reversal that would indicate something like stagflation. In the 1970s, we had years of very high inflation rates, double digits or more, and so we didn't even get that high in the post-pandemic period, and so it's not likely that we're returning to that very high level of around 10% inflation that would indicate stagflation. And
But
then on
is
the
that something that the Fed would even acknowledge? Because that's not necessarily a great result.
So let's say inflation is around 3% right now. The Fed's target is 2. We hope that it's going to continue coming down to around 2, but that's a lot different than 10, right? And so what he's saying is, like, okay, there's this very, very small increase in inflation that has bucked the downward trend. We think it's going to continue going down, but even if it goes up a little bit, it's nowhere close. It's not going anywhere close to 10%, right? That's his argument. And the same thing on the unemployment side, right? So GDP has slowed down a little bit. The unemployment numbers have gone up a little bit, right? So both indicating the economy is slowing down, but that was probably going to be part of getting inflation down a little bit anyway. In fact, people for the last 2 years have been wondering, why hasn't unemployment gone up more, right? Why hasn't GDP slowed down more that we would expect normally when the economy is slowing down and inflation is going down, right? And so what Powell is saying is, look, we're pretty close now to the lowest unemployment rates ever in US history. And so that's not exactly stagflation, right? We're not talking about 10% unemployment. We're talking about going up from 3.5 to 4 or 4.5%, not going up to 10%. So even though it's true that we've seen these small upticks in inflation and unemployment recently, they're just nowhere near the big problems that would be associated with stagflation. And I basically agree with that take. I mean, I think that I think it is possible that we could see a recession this year. If the slowdown gets worse than the Fed expects, if the problems in the banking system are actually much worse, I think there are bad problems in the banking system. Those things could cause a serious recession, but that's not the same as the small increases in unemployment and inflation right now leading to stagflation. So Powell is not buying the stagflation story, and I think he's probably right about that.
I could talk about this all day, but we do have to talk about meme coins really quickly. Meme coins skyrocketed yesterday after, as I mentioned before, the reappearing of Roaring Kitty. Some cat themed meme coins rallied, but even the larger tokens such as Doge and Pepe were up quite a bit. What do you make of that? Is there potential here longer term, or is this just a quick
Right. Yeah.
reaction to what's been
Roaring
happening?
Kitty is back, right? And so all
Yep.
the GameStop and like a lot of explosions in prices of those meme coins and meme stocks that they've become, basically, right? Because I mean, these are essentially meme stocks. If you talk about GameStop, like, their business model has not changed. Like, that business is going to fail at some point, but they're getting pumped because all these people are coming in to take advantage of the short squeeze. And basically, like, my take on what happened last time was that it was something cool, but it did not, I don't think, create a lot of long-term value for investors there. That company, like, their business model is not good. They actually did try to revise it a little bit because they had access to low funding after their price went up. They were able to borrow and get money at a lower rate, and so tried to take advantage of some new technology and possibly get into internet gaming, but it didn't work out. So, like, their business is going to fail, and that stock price is going to go down eventually. But in the short term, you can pump it up by pushing up against the short squeeze, and that's what they've done, right? And so this is essentially like a pump and dump that works really well because of the short squeeze that's going on. And I think long term, it's not going to provide any value for people that try to jump in and hope to get out before the peak. Hey, it's a risky game. People do that in meme coins all the time. And so I think also for meme coins that it'll have the same effect, basically, that there'll be some pump. Whether that will be sustained or not, hey, who knows? I think definitely for stocks and companies that are are not changing their businesses, that are in failing businesses. Like there's no way that you can fix that other than changing the business. But meme coins aren't based on any kind of business, so there's no fundamental value, and it all depends on what people want. And if they want to throw money into that, hey, maybe it'll keep going up. Doge has gone up for a long time despite not producing anything. And so on one hand, that's kind of cool. On the other hand, I definitely wouldn't recommend it, and try not to make any predictions about that area.
Yeah, everyone's still hoping for Elon to make a move
Right,
with
right.
Doge. But
Yeah.
yeah, fun times as always in crypto. Thank you, Thomas, for sharing your insights this morning.
Yeah, thanks. I'm glad to be on.
Thanks for listening to today's episode. I'm Helene Braun. My co-host Jen Sanasi will be back tomorrow to unpack the fresh inflation data and whatever else is happening in crypto markets. Have a great day.